Good morning, Doug.
Hey, good morning. Can you guys see that? It gives a color code, Pantone 19-4151. Should we pop open the disclaimer so folks can read that while I'm talking?
Hang on here. I got it open. I
I
just
don't
haven't
want to read
shared
that
it.
to anyone.
Yeah, I'll share it with them.
So this Pantone 19, feel free to read the disclaimer. Pantone 19-4151. Keith spotted this, and it's a color code. And I first started to learn about color codes through a friend of mine who owns or he did own a business at the time that helped people brand stuff, and he helped Gimbal. And I remember when he sent over the colors, they had this Pantone code. And I thought, how cool is that? That math and art go together. Everything is in order. It has a code. So a shade of blue might have a 451 and a 453. Anyway, just those little things of life that make life interesting.
One of my first jobs out of college was dealing with colors. I don't even know if you knew this.
No.
There's a thing that makes this computer work that's called a color palette, and it's a binary component, and it so you go 1 2 4 1 2 4 8 16 32, and that's how technology things expand. They double. And so I was tasked with marketing the Texas Instruments color palette, and I can't remember if it was 256 colors that they had at that point, which is a lot of colors.
That's a lot.
Yeah, but what happens is when your color palette gets obsolete, it actually is doubled. So it go to 512, and who knows how many colors we have now.
Right.
But once if you're marketing the 256 color palette, when the next guy's marketing 512, there's not really a market for it anymore. And that was my task. And so that was not only math and colors, it was engineering and colors that was going on back in that day. So pretty funny stuff. But that wasn't even our outline, was it?
And I think, part of what we do here, you think of like your book. Do you not have a copy over here?
I don't. You have to get it out of the basement.
Okay. Well, Keith wrote a book, Financial Survivors, designed to help people going through life's greatest transition.
Yeah.
And on the cover of that is a picture of a tree. It's got leaves on it. But you have roots that are a component of a tree, and then you have the leaves. The leaves are just beautiful shades of green most of the year. But the roots, those are deep and unseen. And so like what we want to help people do is on the beauty side, the leaves, the colors, all that stuff. We like that. And we got a great piece of art here. We appreciate that side of life. We also value the roots, the part of what you're about, your money. That stuff's really important to us, and helping you manage that side too. And so they all come together and they create some great stuff.
You were talking a couple of weeks ago about your friend Blake's project of helping people write letters.
He wants to help 1 million dads write a love letter to their kids.
And that was one of the projects in that book that I assigned the readers, was to write a letter like that, because it just empowers the people that you leave behind. And one of the people, right when I wrote that, back in the 2000s, was suffering with cancer, and that his grandchild was just about ready to be born, and I just encouraged him to write a letter to their grandchild. And I noticed on our calendar today, his widow, they are celebrating their 50th. Today would have been their 50th anniversary. But it's those roots kind of things that go a lot farther than you know sometimes, and just encourage you all to think broad and deep about things.
Thanks for jogging that memory.
Yeah, that's really good stuff. Good stuff. Well, what do you got on your thoughts today?
Yeah, well, we can get into the market, which I always like to do that. Talk about a beautiful piece of artwork, just a plot dots and prices and volumes.
You want to look at that? Is that what you?
Yeah, let's just do that. Let's do that.
Well, let me just show what I got on the screen here. I've been telling you guys about my own little kind of charting software here. It shows you the total number of stocks in our database is 9,570 as of today. The number of them below, they're either their 200-day, their 50-day, or their 21-day moving average. And I highlighted them in yellow, and more than half of them are below that. And boy, we were cooking with some really good oil down here, that extra virgin olive oil. But then the markets turned, the inflation fears kicked in, and now you can see the shorter term ones, a lot of them are dropping below their 21-day moving average, and getting closer to half of the stocks being below their 50 or 200-day moving average. So that's just what's going on out there. We have got some of the money back in the market. We'll have to see if we're going to keep it in there with this thing. What we really like to see, and I'll switch the screen share here. Let's see here. Don't want to show this to you guys. We'll switch over and look at the NASDAQ here. What do you want to talk through with this, Doug?
Well, let's hit the important areas, the areas that you guys probably get bored of us talking about, but maybe you're learning them too. Maybe you're seeing what we see. I hope you are. If we just take a look at the 200-day, which is the black line that Keith's highlighting there, and I ran track in high school. I ran the high hurdles once. They must have needed a guy to run high hurdles because I was like 5'2", and it was nearly impossible for me to run the high hurdles. And then I got to run the lows, and so what I see happening here is kind of like me running the high hurdles. Is the 200-day moving average was once pretty high, and right about where Keith drew the red line, you can see the 200-day average is much higher than the price. Hover over that, Keith. Let's see what
over here.
Right underneath your line is fine, and let's just track. Yeah, how far away was it? 18%. Okay, so the prices of the NASDAQ were once 18% below its 200-day moving average. That's pretty wild.
Yeah.
And so where are we today?
Today we're right on it. We would be at looks like it says negative 0.4% as of this moment. We're down 2% today.
So the hurdle has been lowered, and it may have got, I would love to see it run over it. But what I'm trying to say is the prices, aren't that far off from the 200-day moving average. And that's encouraging to me. Would I like to see the prices moving above this? Absolutely. But we're not under by 18%. And so that tells me that investors are out there saying, hey, where's the value? Where's the opportunity? And with the 200-day being a little closer to the actual price of the NASDAQ, I'm optimistic about that. I would love to see it kind of hang out here for a little bit, establish some foundation.
I'm looking on some other software that is proprietary, and I can't share with everybody, but let's see here. I hit the wrong button. Let's see. They go from right. Well, how's it?
And while you're looking at that's kind of the same thing as earnings. Earnings like a Wall Street firm like Merrill or Morgan Stanley, who have analysts trying to get ahead and say, hey, this is what we think Apple or anybody else, I'm not promoting Apple, I'm just saying this is what we think a publicly traded company will earn by the end of their fiscal year end. They're trying to guess what that is, and so they're going to be raising and lowering their estimates accordingly, and they're going to try and see what will beat expectations. And so right now, when we look at the price of the NASDAQ and we say, hey, it's right on the 200-day, that tells me, hey, things are going okay. And we don't have to get too excited one way or the other.
I was looking at how far the NASDAQ 200-day moving average is below where it was at its peak, and it's about 25%. So even so, you over here, you're 25% higher than you are here on that.
Mhm.
So to kind of see, you've got a declining 200-day moving average, and you don't really have as much downside risk at this point. I mean, you always have 100%
Yeah.
downside risk
Yeah.
on anything, and so but the risk that when we were kind of hitting these ridiculous highs a year and a half ago is much less today.
I think one of the most frustrating stock markets is when the 200 days just kind of hanging out and stock prices go in and out of it, in and out of it, in and out of it. Whereas this one, we had such a dramatic year last year where, like you're saying, the average has come down. It's basically met us where we are.
Yeah.
And really the one of the more interesting markets that we don't talk about much, and I don't even know how to gauge it unless I showed specific investments, but is the bond market. And the bond market, it kind of looks like this chart, wouldn't you say?
Yeah.
And it has had a really good January where the bonds started to come back up in price and started to look pretty good, where you're getting about a money market yield, but you're also getting appreciation on the bond. And they've started to sell off just like this has.
Yeah.
So to run to bonds for safety, maybe not a great idea.
I mean, if you're looking for safety, I'd say like certificates of deposit, they're not going to get, there is no safe investment. There's risk of all sorts with any investment, but you're going to, we were able to find some 4.5% to almost 5% CDs for clients this week. And that's no guarantee we'll be able to find them next week, but that's what they were.
Yeah.
And that's part of the reason we're seeing the markets struggle where they are, is that you've had about a 14-15 month bear market now, and people are getting worn out. And if you can offer them 5% guaranteed, it's like, let's do this thing. I'm tired. And
you know what I haven't heard in a long time? I mean, okay, so we haven't seen the bonds or the CDs, we haven't seen those be a real competitor against the stock market. But something else I haven't heard in a long time is buy the dip.
yeah.
You remember we were like hearing that constantly?
Right.
Hey, just buy the dip, it's on sale. The market's on sale, buy it. Well, I haven't heard that in a long time.
Well, and I think and I don't know that I've written about this in our anchor newsletter, or if I've talked about it. I think a lot of investors are more naive than what they might think they are. I find myself that way about life. Like my kids will explain something, I had no idea that was going on. And part of the reason, let me just use this current chart as an example why you might be lured into a kind of a naivety about the markets. But so if you just started working as a 22-year-old employee right here, January a year ago, and you put all your 401k into the NASDAQ at 16,000, and today you can buy all you want at 11,000. Well, you're buying on a monthly basis. If I could draw these lines, straight at each month, you're buying some on each of these months, which is known as dollar cost averaging in the industry. And so you're getting all these different prices along the way here. And so you only got a high price, right, on that very first acquisition, and you're not really feeling a lot of pain as if you would have retired right here. If you'd have retired and you thought, I want to put all my money in the NASDAQ at 16,000, you would have felt a lot of pain over last year. But these young people, then, as they're doing this their whole career, they're really buying volatility, not really a specific investment. And they probably, on this dollar cost averaging over the last 12 months, they would be down a little bit, but they wouldn't be down very much, if any, because if their company's matching dollar for dollar, it looked like they're making money, and they would feel like and think that they're rocket scientists with investing. And so I'm going to go do this thing alone. And the only time you really figure out that I'm not so good is once you quit putting it in, you have a fixed income, and no longer is the market actually getting that 6% bump or whatever your employer was doing. And so that false sense of security then doesn't really become a reality until you're on a fixed income and having to kind of absorb all the emotional ups and downs at that point in their life. And so that's just a psychological observation I've made. I haven't really said much about it, but it really has been going on for about a 40-year period of time with the evolution of IRAs and 401ks.
So the message there is just keep working.
Keep working. The message is buy wisdom and get a good financial advisor. And you know, we appreciate you. We're thankful for you, and we do accept new clients, and we're thrilled to coach people and help them think through these things. But yeah, it's an interesting observation, I think.
Yeah, I saw that reflected in my own 401k here recently. I was like, oh, okay, well, that didn't go down. Oh yeah, some new money was added to it. Yeah. And so yeah, check it out. And I don't know, like, I mean, we track everything here. And so this stuff's super important and it's super interesting. We love doing this. And so like in our tracking, we know like what's working and what's not. But in your 401k, you probably don't know that. You can look and you can see like, oh, this mutual fund did this over the past year, but you can't really track like how much your money went into it versus the company money. What is the investment really up? What is it really down? That's a good point.
I'd say even your personal real estate works that same way. You feel like you're making a lot of money on it. But if you take all the residual expenses that you put into it, to your actual rate of return may not be what you thought.
Even if I take in that like 2.5% mortgage I have and put that in there, I mean, that's like running with a parachute on.
Yeah. So not everything is how it feels sometimes, I guess what I'm saying. But yeah, I'd encourage you that we're happy to look at your 401ks and kind of help you think through what your allocations are there as well, and see what you can do to kind of maximize the possibilities there. What else you want to talk about, Doug?
I think the NASDAQ pretty much covers the market for right now, don't you?
I think that this is what I would like to see personally. I'm not getting my way right now. Let me see if I can. If it'll. There we go. What I would like to see is sure temporary line pin. I'd like to see this right here, this 200-day moving average, end up where it bounces off of it and starts working its way over this way, and in order to kind of be optimistic about what's going to happen in the near term. Today's activity right now, it's saying we're going to violate this 200-day moving average, and we'll try to give it some time to see what happens. But really love it to see it kind of act opposite of what it was doing over here. When it came up to it, it bounced down. We'd like to see when it comes down to it, it bounces up. So that's all I got to say about that, Doug.
Yep, that's kind of how I see it too. I'd like to see buyers and sellers argue over price for a little while.
Yeah, and one of the things we haven't seen a lot of in the last probably 60 days is when in individual stocks, when they look like they're getting ready to move, they just fall over. They just don't rally up, or when they get a little selling pressure, the buyers go away and they just flop pretty dramatically. And so we'd really love to see that demand side pick up where we've got buyers on things, and when that'll happen eventually, and maybe it's just around the corner. What would you say about your optimism about the economy, Doug? What do you think?
Well, my optimism and probably realistic thinking on it is, and I don't know if this is Warren Buffett or who said it, that I think your best investment is always in yourself. It's in your family. It's in the people you care about. And so where you place those investments can have a huge impact on your economy and on the things that are important to you and the things that you want to check off the list. And so the economy, the market is described as a leading indicator. And so the market's trying to paint this picture of where we might be down the road. But I think your personal economy is way more interesting than that. And this idea that, hey, we live in a free country where you can be anything you want to be. You can do anything you want to do. You can meet people who've succeeded in an area and ask them questions of, hey, why do you like that? Why are you doing that? And you can learn from them. And I'm blown away at the willingness of people to share their counsel. We've benefited from that with our own personal interests here. And we want to extend that to you. And so that could be as simple as you need to talk to this heating and cooling guy.
Right.
Or it could be a little more complex. I'm thinking of doing a trust. What is an irrevocable trust? What is a revocable? Do I even need one? I mean, so there are people who've poured into us because of their own personal interest in the things they've invested in themselves. And so on the level of the economy, that's where my heart is interested in right now is what can we be doing? What can you be doing to express yourself with the just God-given talents or the fire in your belly to make the world, make yourself better?
Boy, that is a good word. I was able to start a business because mom and dad took some of their capital and invested in me. And we talked to some clients earlier this week. They invested in their son and in his business. And those soulish kind of things where you take your financial capital and bring it to your social capital, those people in your circle, those things are really, I think, the things that bring smiles to people's faces in the long haul. I was finishing up our March anchor yesterday and kind of looking at some of the topics I've written in the past. And what I was writing on yesterday was just the significance of generosity. And there was a pharmacist in Evansville when I was a kid. His name was H.A. Woods. And I just remembered as a youngster, his generosity would be, I think he probably had 10 or 15 drugstores, and he would have candy in his pockets to hand to the little kids like me and a smile. And that's not like major generosity, but it's the kind of generosity that sticks in a little kid's mind. It was major to me, right?
Yeah.
And so generosity is taking that financial capital and spreading it around your social life and really changing the world in a big way. Yeah. So there are cool things out there available for you.
Yeah. What do you have any thoughts on the economy? I mean, have you been reading our friend Brian lately?
I read him. He gets angrier than I've seen him in a while, and they used to call him a perma bull, and he definitely is not that.
Yeah.
But I can see
it for good reason.
I mean, I wrote an article next month. When you get the anchor, I wrote about communism, and there was an event that stirred me, and so I was writing about it. And the reason I was writing about generosity is really the thing that counters communism and socialist thoughts, because those type of philosophical beliefs believe somebody else does everything, right?
Yeah.
Generosity is, I'm going to take personal responsibility and help those in my circle. And so yeah, you could get really frustrated. I think a lot of the political decisions that are made both on the city, state, and federal level is selfish people spending other people's money, creating inflation, and blaming others on the inflation. I guess that's as concise as I can say it.
Yeah. And so the free exchange of enterprise of ideas, that's worth talking about.
Yeah.
That's worth pouring money into. That's worth taking maybe a coffee break with somebody, hearing about what they're doing, hearing about what they want to do. That's the stuff that just transfers. It's inspiring.
Yeah. I was talking with a client earlier this week, and I think it's Medicargo is a company in Canada that was developing COVID vaccines and using tobacco in a way that's beyond my comprehension. And the World Health Organization basically came out a year ago and said, we will not endorse any vaccinations that have anything basically to do with the tobacco industry. And I was thinking, here the tobacco industry is looking at tobacco in a different way rather than smoking or chewing it, but how to help people. And consequently, the majority owner of that business just shut it down earlier this month because they they figured even if we develop this thing, we're going to get pushback from the bureaucrats. And so when you think about what small business owners do or what businesses do, you hear a lot of rhetoric from the media about it, but all of us that have small businesses are jumping through hoops, doing high hurdles like Doug was, trying to meet all the regulatory things, and you just get a lot of stuff thrown at you. And so those are the reasons I think we're big cheerleaders for small business owners, is to cheer you on to success in spite of all the darts coming at you.
Get someone to help you take the hurdles off the track.
Exactly. Don't put more out there, right? I can't. How tall were you when you were jumping?
I think I was like, well, I know on my driver's license at 16, I was 5'2".
Yeah, those are some tall hurdles.
They were. Yeah.
One of the disclaimers I had up there on today's disclaimer was, be careful if you're buying trading cards as a investment. The sports cards collectible industry saw prices soar along with other speculative assets in the months after the COVID pandemic hit in 2020. But the industry hasn't been immune from the downturn either. Using a popular LeBron James rookie card as an example, its price rose 4,400% from pre-COVID levels to the high point February 2021. It has now fallen 83% from its peak. 83%.
Buy on the dip. No, I'm just kidding. Don't.
Sports. I've got some sports cards. I wouldn't plan on retiring with them, but they are volatile just like any other asset is, and so you never know what's out there. Form 5498. 5498. We've got a few calls on the form 5498. I'm thinking on here somewhere, I didn't look at it that closely, that it says that this is for information purposes only. And so when you get those form 5498s, don't feel like you got to do something with them. I believe what the IRS is ultimately going to do with this is have their own system to calculate what your required minimum distribution should be and match that against what you actually take out at age 73 is the new age. So that's what your 5498. And what I was really impressed with on these this time is I actually looked at them, and what Fidelity did that I hadn't seen from any other provider is, as they're required to send these out to you, is they put your beneficiary designations on that account on there for you to review to make sure it's who you want to be the beneficiary. And so I would encourage you with those Fidelity 5498s, don't just stuff them in the file, look at the beneficiary designation. And if it isn't what you desire, call us and we'll help you get that updated.
Yeah, it's a good word.
Yeah, that was a lot of fun.
Is it my memory, or did the 5498 normally go out in like May?
That's when LPL sent them out.
Yeah. So good job, Fidelity, getting them out even earlier.
They got the 1099s out earlier, and I'm not bashing anybody. I'm just saying nice job on that, Fidelity.
Nice job.
So I had breakfast with my daughter Kristen, and they had literally this in a picture frame, probably the size of a poster board on the wall, 4 or 5 different colors. And she's an interior designer by trade, and I was pointing that out to her. And I asked her what she thought about it, and she thought it was cheap decorations, Dad. And I was like, well, okay.
Yeah.
And I was listening to a podcast on the way in this morning with Cal Fussman.
I love Cal Fussman.
Yeah, he was being interviewed, and
big questions. Is that right?
Well, that wasn't what it was, but he was being interviewed by somebody else.
Oh, okay.
Yeah. And so Cal Fussman was he's I don't know if he still does writing. He was a writer for Esquire, I think. And he what do you call the guys that select the wines? Like a connoisseur of wines. He
the banquet master.
Yeah, something. There's a tech, but anyway, he wanted to learn how to do that, and he was doing it at the restaurant on top of the World Trade Center.
Oh,
and
cool.
Was there right before 9/11.
Man.
Just traumatizing, but he did a lot of cool things. If you ever want to listen to a cool podcast, Cal Fussman is an interesting guy to listen to. But one of the things he would do is go to breakfast every day. I don't remember where it was in Southern California, but Larry, the talk show, Larry King was at the table with him, and Larry King would just get a lot of, about 8 or 10 guys, and they would just really have a good dialogue. And so what they would do every day when they would leave the table is they'd all say to each other, carpe diem.
Yeah, my grandpa used to have a sweatshirt he'd wear that said carpe diem.
Carpe diem, and it means seize the day. And so that's how I would leave you all today, is to seize the day. And every day is a big day. But I also would throw some humor out there, because my daughter Kristen, she was getting ready to go grab the day and take hold of it. And so I told her carpe diem, and she said, seize the day, Dad. And when I say seize the day, I'm not talking about that kind of seize the day. And you would think that's not politically correct, but that was her optimism, because just about a year ago, she had a brain tumor that caused her to have a seizure, and she can laugh about it here shorter. So
Yeah.
she was actually seizing the day in a very special way.
That's very cool.
All right, you guys have a great week. We'll look forward to seeing you soon.